Hi, my name's Emerald Fisk. I'm a portfolio landlord, property investor and mortgage advisor. Now, I am not here today to give you any financial advice because you would need financial advice that is tailored to your situation. But what I am here to do today is to talk to you about the news bulletins that keep saying lenders are pulling products. They're not. But we're going to go into that in a minute. Firstly, let's have a look at what is a product. So there is loads of mortgage products out there in the market. There might be 2-year fixes, there might be 5-year fixes, there might be 7 years, 10 years, any range of years that lenders want to provide to you. Now, a fixed term product is where the lender loans you the money for a period of time, that might be 25 to 35 years, but you fix your rate for 2 years, 5 years, or whatever your term product says that you're fixing it for. You might take a fixed product because you want to know that your mortgage payments are the same each month. So you're fixing in that rate for a period of time so you know how much money you're paying towards your mortgage every month. There are other products available. There's discounted rates. This is where the lender takes their SVR, their standard variable rate, and they discount it slightly. Now, the discounted rates do generally move with the market. So if the Bank of England put their base rate up, well, more often than not, the standard variable rate of each lender goes up and down. There's also tracker products that track the Bank of England base rate, or the tracker products that track the lender's standard variable rate. Now, you might not know which of these products you would like. This is where you would speak to a financial advisor, explain to them your circumstances, talk to them about your risk appetite, and that advisor would say to you, I think that this product is most suitable to you. Now, why do the news bulletins keep saying lenders are pulling products? And I don't mean pulling like what you're doing on a Saturday night in the nightclub. I mean the products are being removed from the market. Why is this happening? Lenders pull their products because they want to reassess the situation. Now, lenders don't have a big pot of money that they loan out to people like you to get a mortgage. What lenders do is borrow money from other banks. Now, the way that the lenders borrow money is on what we call the swap market. And the swap market has swap rates. So the lenders approach each other and they're always loaning and borrowing money over fixed term periods, just like you or I do for our mortgages. Now, when the swap market moves, which means that the lenders are borrowing money at a higher interest rate or at a lower interest rate, at the moment it's mainly at a higher interest rate, if I'm honest, then the lenders have to reassess what they are doing because banks are a business. So the banks need to make sure that they're borrowing money at a lower rate and loaning it to you at a higher rate, and they make their profit in the margin in the middle. So when the lenders are pulling products, they're not pulling the products, they're just removing them from the market, they're reassessing the situation, and then they put the products back out 24 to 48 hours later because they've reassessed their profit margins and they're making sure that their business is running smoothly. Whoa, stop the rant. I've got something important to tell you. I'd like to invite you to a 3-day multiple streams of property income event where you can get loads more information like this, and you'll find out lots of awesome strategies on how you can buy properties with mortgages, but also how you can get hold of properties without mortgages. So if you would like to join us on this event, click the link above or look for the link in the comments. Anyway, let's get back to my rant. So let's have a look at this as a real live example. Imagine when Freddos were 10p and you went and picked up your Freddo from the supermarket shelf. You walked over to the till and the cashier said that Freddo is now 25p. You're like, what? The sign said 10p. You'd be really annoyed, wouldn't you? So what would happen in real life is the Freddos would get removed from the shelf and then they would get put out with a new sign that says 25p, so that the price on the shelf matches what you pay when you go to the till. Now, this is exactly what's happening with mortgages. interest rates that are advertised are the ones that are available. If they weren't available and they changed as you were applying for your mortgage, you would be really, really annoyed because you're doing your budget and you're doing your numbers based on what's available at the time. So at the moment, the lenders are pulling their products and putting them back out at a higher rate because interest rates are going up. However, there are times, and there will be times again, when the interest rates are going down. And the lenders will do exactly the same thing at that time. What they will do is they will pull their products, they will reassess the situation, and they'll put out cheaper interest rates. So it actually works both ways. Sometimes lenders pull their products for 48 hours and bring them back out higher to make sure that they're still running at a profit. Other times, they pull their products, they drop their rates and they put them out again to make sure that you're getting the best value, but they are still making a profit, because at the end of the day, the banks are businesses and we're all in business to make money. So the banks are too. That is me finishing my rant. Today we have looked at what products are, what pulling products means, and the fact that it is nothing for you to worry about. It's nothing to be scared about. It's just lenders reassessing the situation and taking the products from the market to make sure that everything's running smoothly within their business. So let it all out, have a big sigh of relief. We can all get on with our day-to-day now and not be stressing about what the news is telling us to worry about. I've been Emerald. This has not been financial advice. You've been great. If you've enjoyed this, then comment below, like, subscribe, hit that notification bell. If you've got any questions or queries, drop them in the comments and we'll do more videos like this to keep you informed on what's actually going on out there in the market.